So, hello again, Facebook Live. Sean Yesner here with Yesner Law and the Crushing Debt Podcast. Those of you that joined us just recently, I was interviewing for an episode of the Crushing Debt Podcast and had invited this next guest, Michael Banner, to come over and record an episode. And it was actually kind of cool. On the last Facebook Live, he messaged me that he was watching that Facebook Live, and now he's with me on Facebook Live. So, Michael Banner is my guest this week. I assume I am pronouncing that correct. Yes?
You are correct.
Okay, good. Michael Banner is with Professional Mortgage Alliance, and he does reverse mortgages. And so before you send me hate mail, and please don't turn off Facebook Live, we are going to explain to you all about reverse mortgages and when they are actually a good thing, which I think they can be a lot of the time. And I'll probably also try to coax some examples of when they might not be a good thing.
You might be successful at coaching to do that.
But we'll talk about when and why and how they are a good thing. So, wow, so far nobody's watching us. Maybe they got tired of the last one. We'll see. But either way, we'll record it, and so it'll go out as a podcast regardless. Okay, so you ready?
I'm ready.
Let me get my stuff set up. There you go. Okay. On this week's episode of the podcast, Michael Banner with Professional Mortgage Alliance. So welcome back to this week's episode of the Crushing Debt Podcast. My name is Sean Yesner with Yesner Law, and I have another guest with me on this week's episode, and we are going to talk about the often misunderstood area of reverse mortgages. So my guest this week is the president of Professional Mortgage Alliance. He is a speaker, a national speaker, all on the topic of using the equity in your home during retirement. Of course, we're talking about a reverse mortgage. I met this gentleman through BABA, through Become a Better Agent. So thank you to the BABA community. Thank you to Kevin Overstreet. Thank you to Become a Better Agent. Although I think we have met prior to BABA. You are going to be a speaker at next month's BABA, Become a Better Agent 26, right?
Yes, that's going to be a great event. It's incredible what he's happening. What is happening there.
And where is that one going to be? Where's that one located?
That is going to be, I think, in the Carrollwood Clubhouse.
The Carrollwood Country Club. Yeah. Okay. Yeah. So out here in this area of the woods, out here in West Chase, in my neck of the woods. So my guest this week, who I've let talk before I actually said his name, is Michael Banner. Welcome, Michael.
Thank you very much. I appreciate it.
So again, you're president of Professional Mortgage Alliance, and anybody who wants to reach Michael can go to his website, www.professionalmortgagealliance.com, all spelled out, professionalmortgagealliance.com. Also, you can shoot him an email, M as in Michael, Banner, B as in boy, ANNER, at PMANOW.com. P as in Paul, M as in Mary, A as in Apple, N as in Nancy, O as in Oscar, W as in W, .com. M Banner at PMANOW.com. And again, I'll have that stuff all in the notes. So welcome. Thank you for being on this week's episode.
I'm glad you invited me, really, yeah.
So being in the real estate industry, I know what a reverse mortgage is, and it is basically the reverse of a mortgage. But I know there's a lot of myths about it. So yeah, so let's talk about it. The myth, the first thing that I get about reverse mortgage is this concept of, well, when I pass away, the mortgage company is going to take the house away from my heirs.
Yeah, that is the number one myth. And boy, is it a myth. It not only hurts us, it hurts us wherever we go. It's like a dark cloud over us. But this, in fact, is a FHA mortgage, FHA insured mortgage. The only people on the title to the mortgage is the clients themselves, the owners of the home. And quite frankly, your mortgage holder, whether it's a reverse mortgage or a regular mortgage, has nothing to do with the disposition of the home when the borrowers die. When the borrowers die, their home is going to go to wherever they direct it, their son, their daughter, their nephew, because they don't like their son or their daughter, their temple, their church, the crazy lady in California who left it to her cat. That action.
Wow.
Yeah, we have nothing to do with where the house goes. But you're right. That's the number one. Well, I want my children to get the house. they're still going to get a house.
Yeah. Well, and what I tell a lot of people is if you have a forward mortgage, for lack of a better word, a regular mortgage, a conventional mortgage that most people think about. Yeah. When you pass away, if the bank doesn't get their money, they're going to foreclose on the house.
That's right.
So in both examples, a conventional mortgage, regular mortgage, what most people would think of as a mortgage, and in the case of a reverse mortgage, if the homeowner dies and there's no way to repay the bank is going to foreclose.
That is correct. But there is 3 big differences that people just look at and go, wow, I never knew. Number one, a reverse mortgage is a non-recourse loan. Most people don't know, most laymen don't know, as an attorney, I know you do, what non-recourse means. But to your listening public, non-recourse means there is no personal guarantee. The house stands for the debt. So let's just say people between the years of 2009 and 2013, when they passed away and the house was $100,000 or $200,000 upside down,
right?
The banks that held that mortgage were in fact saying to the heirs, did mom and dad leave any cash, life insurance, stocks and bonds? You're upside down here. And mom and dad personally guaranteed the loan. With a reverse mortgage, if in fact mom and dad's death, and let's face it, that's not going to be at the same time,
right?
God forbid a plane crash or something like that,
right?
But if they both pass away and you are unlucky enough for this country to be in a recession and mom and dad are upside down, it has no effect on the estate, unlike a regular mortgage. Mom and dad could have left them $1 million in life insurance, $100,000 in the money market, $100,000 in the IRAs. No one can touch it.
Right.
It is not personally guaranteed, and that's staggering.
What I did a lot of was a lot of the reverse mortgage companies would tell me, get us an appraisal, and then we'll take 95% of the appraised value, I think is what it was.
That is number 2 of the 3 things. Yes.
As a short sale.
Yeah.
So in a situation now, if the house has it, and reverse mortgages are designed that, and we may talk about this later, but even though they are negative amortizing products, meaning the principal balance is going to go up every month, every year, whatever, they are supposed to be intended to be designed that when the person that borrows money passes away or no longer lives in the house, there will be enough equity in the house that it can be sold, repay the bank in full, and there can be some extra. We're only worried about this issue in the situation where we're in a down economy.
Yeah.
And we're upside down in the house.
Yeah, I can't tell you how many people I run across as I travel and do these type of things and live classes, and somebody literally says, what do you do for a living in an airport or a restaurant? When you say reverse mortgages, they almost physically recoil, and their first reaction is, especially from a real estate agent or an attorney, I've been involved in 27 estates in the last 10 years or 5 years, and everyone that had a reverse mortgage was upside down.
Right.
That's because the house was worth half what it was when they bought it. Stop blaming my reverse mortgage,
right?
For the recession. It wasn't my fault.
Right. But like you said, the second thing about it is that in most situations, when the house is upside down, it's a lot easier to get a sale done. A lot of these reverse mortgage companies will take a short sale, probably because they're FHA backed.
They're FHA insured. Insured. Would be the proper word. Yeah, insured. They're not going to take a loss. And then the other thing that's so, it's legal, and this is the legal part of the loan, but it really touches on the heartstrings of everybody. And again, you don't tend to think of it till 20, 25 years after mom and dad got the mortgage. But as we discussed before, mom and dad don't go at the same time.
Right.
And in fact, usually it is dad that goes first. Mom usually goes about 5 to 7 years later.
Sorry, guys.
Well, there's an old joke in the financial planning world. Why do men die first? Because they want to. Yeah. So whoever is watching on Facebook Live, the women just cut off. So they don't want to watch this anymore. But be that as it may, there's something very emotional about this, especially when you get to my age and a lot of people are dying in the family. Your aunts, your uncles. I'm now the old uncle in the family. But when you think of dad dying, mom is losing usually about 60% of the household income. Not only did she just lose her spouse that she's been married to for 50 years, but his Social Security goes away. Many retirements go away at death.
Right.
Dad was the one fixing the pool. Dad was the one doing the things around the house. So, along with the emotional and grief of losing your longtime partner, suddenly your household income is cut by 60%. And that's when looking and going, wow, we have no house payment really helps mom in her upper 80s.
Right.
Even it helps more than it did when she got the reverse mortgage at 65. And it's something I've personally witnessed many times, and it's a neat thing. It really is.
So there are some requirements to get a reverse mortgage. The first is age, right?
Right. At least one of the borrowers, if there's a married couple, have to be 62 years old. At least one.
And that person has to reside in the property for the entire time.
Exactly. Well, when you say the entire time, I do reverse mortgages for people that have 3 vacation homes. They're spending their winters in Florida, their summers in New York, a certain part of the year in South Carolina playing golf, and sometimes they're in Colorado skiing. But this must be their primary residence.
Okay, so they couldn't do a reverse on all 4 of those houses.
No, they could not.
Only on one of them.
Only on their primary residence.
Okay, and then that's then again where them no longer being in the home disqualifies them for the reverse mortgage.
Right.
Is an event of default on the reverse mortgage.
Exactly.
So they either die or they move somewhere else.
Exactly.
What if they were to move to like an assisted living facility? Is that still a situation that would trigger the reverse mortgage?
It does, but it gives them time. This is something that's prevalent in the senior world. So it's written into the rules, the HUD guidelines for reverse mortgages. If in fact your borrower or borrowers do have to move into a facility, they literally have 12 months from the time they move out to make up their mind what they want to do. And another thing that statistics are showing, and again, it's emotional. It kind of pulls on your heartstrings when they know they can come back to a home with no debt service, no more. They're saying to the doctor, all right, when am I getting out of here? Right. It's not a question of, I'll live here for X amount of thousands of dollars a month. I have a beautiful home that has no house payment. Right. I need to get back there.
So the mortgage can be structured in a bunch of different ways. It can be structured where it pays them a lump sum. It can be structured where they get a monthly payment.
Yes.
I've even seen or heard of situations where the reverse mortgage would pay off the conventional mortgage.
So we always have to do that. Since we have to be in first position, if there is an existing mortgage, we must pay it off.
But I'm talking about even in a situation where the house might be free and clear and they want to tap into that equity without having to make a mortgage payment.
Oh, yes.
They can refinance. In some cases, they can finance the purchase of a house using a reverse mortgage.
Well, yeah. Now, quite frankly, you're confusing 2 issues.
Okay.
There is another mortgage, which is probably my favorite mortgage of them all, which is called the purchase reverse mortgage. It's called the HECM for purchase.
Okay.
A lot of people don't realize a reverse mortgage is a HECM. Reverse mortgage is a slang term.
Okay.
The real name is a HECM, HECM. A home equity conversion mortgage, but the whole world calls it a reverse mortgage,
right?
Including FHA. A purchase reverse mortgage has nothing to do with their existing house. Mom and dad living somewhere up north just sold their house for $300,000 in Ohio or Michigan, in the winter, and they're dreaming of coming to Florida, as so many people do. And they come here and they have a goal of having no house payment. So in fact, they find a $300,000 house. They write a check for $300,000. They have their house and they have no house payment.
Right. But they have no money either.
They just spent the bulk of their money.
Right.
Now enter the reverse mortgage. If they're in their mid 60s, let's say 62 to 65, they're going to have to put down approximately 60%, 60. It's a big down payment. So you put 60% down on that $300,000 house. That's $180,000.
Right.
The purchase reverse mortgage lender comes to the closing with the other 120. 180 from the client, 120 from the lender. There's your 300,000, Mr. and Mrs. Real Estate Agent, full list price on your house. The clients have their $300,000 house. The clients have no payment, no monthly principal and interest payment. But I'm sorry, do the clients have an extra $120,000 to put back in the money market or the portfolio? That's life changing.
Yeah.
And then there's another way to use the purchase reverse mortgage, which most real estate agents and I find even better. Let's say you take that $300,000 buyer and you show them a $400,000 house. They go, okay. And they fall in love with it because it's such a nicer house.
Right.
60% of 400,000 is 240. They come to closing with 240. Reverse mortgage lender comes to closing with 160. They have their dream retirement home. They just love it.
And 60,000
and
in
an
the bank.
Extra 60 grand. And they're handing out that real estate agent's card to everybody in the world going, look what I bought with no payments.
Right.
It's a great product, the HECM for purchase.
Okay. And so no payments is no payments to the mortgage company, but
Yes.
they still have to pay property taxes every year,
insurance.
This is not an escrow.
No, there is no
product.
escrow. They are responsible for their property taxes, for their property insurance, and of course, if there's a homeowners association, you really got to pay that because they have no sense of humor whatsoever.
No, they do not. But that's only, I mean, that's a small amount, a couple
Yes.
of grand a year.
Yeah, absolutely.
Which you can budget for, which you could probably, if you structure the reverse mortgage correctly, could then pull from the reverse mortgage if it's structured correctly.
No,
No,
you're mixing the traditional.
Okay.
Where you're taking money out. In the purchase, I'm giving all their money up front
okay,
to give to the seller of the home.
right?
But truthfully, if you don't have a house payment and you
You
still
can-
can't budget for your taxes and insurance,
Right.
then you're doing something wrong. It's not our mortgage.
Right.
You know, And it just, there's another thing that also people do forget. Yes, is a negative amortizing loan because your balance is going up. But don't think for a minute that the reverse mortgage lender won't take your money. I have many people that get a reverse mortgage and go, you know what? I'm going to pay the interest every month or every quarter, have no obligation of a payment. I could still use the tax deduction. I'm making money.
Okay.
And
Wow.
now their interest isn't accruing. So don't think for a second the bank is not going to take your money.
Yeah, it's a bank. It'll take your money.
This should be more like a payment option mortgage, except those two words remind people of the very, very evil
Right.
and negative amortizing loans, of the 90s and 2000s. I think that's one of the reasons reverse mortgage has that great cloud. This is nothing like that.
Right.
It just isn't. You're just not obligated to make a payment for the rest of your life. You certainly can if you wish. And got an interest-only payment. That's a low payment.
Yeah. So if it's I guess my question though is in terms of people being so scared of it, there is a limit, and you said it with the purchase reverse mortgage. There may be something different when you're talking about refinancing, using a reverse mortgage for refinancing. But is there a limit, or what is the limit on the amount that they can borrow?
Yeah, there is a limit. In FHA, they keep raising the limit. It used to be FHA loan limit. So like here in Pinellas County, years ago, that was 95,000, which is ridiculous. And it's gone up and up and up. But now it's actually close to 670,000, which is the value of your home. So if your home appraises out at 750,000, in my FHA eyes, it's 676. Now we start with that value. And now based on the age of the youngest borrower, let's use an even number like 600,000, 65-year-old borrower, I'm going to lend you about 40%. 40% of 600,000, 240.
The older the borrower, the higher that percentage.
Yes, the older the younger borrower is, the more we lend.
Okay.
And even then, people complain about that a little, but why are we doing that? Because we want the younger borrower to have equity when they go, because the older one goes first.
Right. So then why are people so scared of reverse mortgages? What was it that gave the industry the black eye that it has?
Well, a lot of reverse mortgage professionals don't like when I say this, and I say it a lot. Most bad things, most bad rumors, most myths in life about anything have a certain element of truth. And the truth of the matter is the reverse mortgage has been around since the early 1960s. And it really and truly made its best improvement of April of 2010. And then it made another improvement in November of 2012. And then again in 2015. And then again just last year in 2017. So the truth of the matter is the reverse mortgage has spent the great majority of its life being a very, very expensive, what we would refer to as a needs-based product of last resort. Mom is broke. She can't go to Publix. Grandma can't even go to CVS for her pharmaceuticals. We're going to need one of those damn expensive reverse mortgages. Right. It didn't always have the protections it does now, but it does. And it has for about 8 years now. But it's hard to get rid of a 30, 40-year bad reputation. And that's what it had. And some people are still afraid of it. So
what are some of the good things it can do?
Well, it's number one it can do right now is eliminate someone's mortgage payment. I mean, before the Great Recession of 2008 through 2013, there was not hundreds of thousands, but literally millions of people that had retirement plans. And one of the biggest part of that plan was to pay off their house. But they lost money in their portfolio. Their stocks went down. One of them lost their job. Now they find themselves retiring with a mortgage. So the number one reason to do this is just eliminate the mortgage payment. I hear that all the time. Mike, we did okay. We got money out of the market in time. And there's not millions in there, but we have cash reserve. But boy, there's $900 mortgage payment. I didn't expect to be getting 1% on my CDs. When I made this plan, I was getting 6.5, 8 years ago. So Mike, get rid of the $900 mortgage payment. So I'd say the first and best thing that is somebody in their 60s, 70s, or 80s can do is, my God, if you have a mortgage payment, let's just eliminate it and make life better. Number two, of course, is just like anybody else, installment debt. You have a car loan, you have some 15 or 18 or 20% credit card loans. Let's get rid of them. Let's let mom and dad or grandma and grandpa, live as debt-free as they can. But then there's some great stuff about it. Then there's a financial planning end of it. We have grandparents right now going, you know what? When I die, I'm going to leave my 4 grandchildren each $50,000 to pay off their student loans. Problem is my grandchildren are strangling on their student loans now, and I don't plan on dying for 20 or 25 years. Let's do a reverse mortgage and give them the money now. What an incredible thing to do. There's all sorts of things like that are being done that are opening up the reverse mortgage to being more of a retirement planning tool. You have people with 7-figure portfolios going, you know what, when the market goes down, rather than selling stocks and bonds at a loss, why don't I take some money out of my house? There's no payments anyway, and let my portfolio recover. Oh my, using the equity in your home rather than selling it at a loss in your portfolio. So it's a different world for the reverse mortgage. There's no way to get around it. Cool.
So anything, we're sort of getting to the end, anything we didn't cover, anything you want to add?
There's so much. And, this would turn into not a, this would turn into your 24-hour podcast.
Yeah, I haven't really
do that.
I used to try to limit it to 10 minutes. And then I said, you know what, let me experiment and let me not care about how long it is. But I think if we went, 45 minutes to an hour, I think that would be, I don't know what my listeners would do. Maybe they want us to go for 45 minutes to an hour.
Well, if they want to learn more, you're going to give my contact information. Don't be afraid of it. I've always said, that there's the two opposites. There's the people that go, oh my God, they're evil, stay away from them. And then there's the people in my own industry that go, oh my God, if you're 62, you should definitely have a reverse mortgage. That's not true either. This is not for everyone. What I've always maintained is that it is simply for a lot more people than most realize. It can be used in some incredibly beneficial ways. And again, especially for, point blank for mom after she loses dad.
Right.
It really is a staggering thing.
So if you want to see Michael do this presentation, not this presentation, but if you want to see him talk about reverse mortgages, you're going to be presenting at Become a Better Agent 26.
I think that's May, though.
Is that May?
I think it's May.
Yeah, that's what I was thinking. I think it might be May.
You got it on your calendar?
I do. And that's
I think it's soon.
Going to be May 10.
Yeah, it's next week.
So, so those of you on Facebook Live, May 10, Michael's going to be at Become a Better Agent 26 out in Carrollwood. Those of you listening on the podcast, I apologize. This will probably come out after May 10. However, I think you're speaking for Become a Better Agent a couple of different times.
Yes, we are.
So be tuned to either my Facebook page, the Yesner Law Facebook page, or go to Become a Better Agent on Facebook, and you can link to their website, and that'll tell you when Michael's going to be speaking on reverse mortgages for BABA. Also, I mentioned his contact information at the front, but it is mbanner, BANNER, at pmanow.com, or you can go to professionalmortgagealliance.com. Michael, thank you for being a guest on this week's episode of the podcast.
I appreciate you inviting me.
And for more information, you can visit us on social media, all the Yesner Law pages, yesnerlaw.com. All the podcast episodes go up on yesnerlaw.com, so you can find us there as well. Thank you all for listening to this week's episode of the Crushing Debt Podcast, and we will catch you in next week's episode. And we are done recording, but we're still on Facebook Live.
Oh, hello, Facebook Live. We're not done yet.
Let me see what Facebook Live says. So, a couple things on Facebook Live. My mom was on Facebook Live. I don't know if she still is on Facebook Live. but my mom was on Facebook Live, and I don't know if she has a reverse mortgage or not. Although she would probably want me to tell you she, even though she may meet the age requirements, she would never admit it.
I'll keep mom's age a secret, I promise.
Okay. And Clear Title's back on, so
Right.
Welcome, guys. They love the Heckam and the
Yes,
reverse
they do.
mortgage.
Yeah, they did.
They love it. So we'll give it a little bit in case anybody on Facebook Live has any questions. Go ahead and ask. You got both of us here. Sorry, you're seeing the corner of my face. I'm looking at my computer monitor. So, but if you've got questions, otherwise, I will shut down Facebook Live. And thanks again.
Thank you.